It is May 5th. This is the CEO Barbecue. My name is Antonio, and today I'm talking to John Mark Stouty of Riverside Resources, which is a prospect generator with a growing royalty portfolio and an up-and-coming spin-out as well. Before we get into the actual interview, though, I'd like to warn you that we have received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Riverside is listed as RRI on the TSX Ventures Exchange, where over the last 3 months, an average of about 55,000 shares have traded daily. Their 52-week high is 20 cents and their 52-week low is 12 cents. With a market cap of about 14 million Canadian dollars and about 75 million shares outstanding, today this is an 18.5-cent stock. Now, I'm not doing a full company overview here today because John Mark and I have had multiple conversations over the past year, and all of them will be in the Riverside specific playlist on the Resource Talks YouTube channel, which is going to be linked in the description of this video. And there's, in general, loads to get into here today, John Mark, so I guess I'll just shut up already, give you the word here, and thank you for sitting down with me today.
Great to be with you again, and we do have news. It's fun.
The pleasure is all mine, of course, and I really am looking forward to speaking with you today because we've had a couple of news throughout the last couple of months since the last time we spoke. I believe it must have been the end of January or something like that. So what's top of mind? What's the most important part? You have Cecilia, you have Bluejay. What else is going on?
We have other things going on, but it is top of mind is Bluejay. So we have other things going on, but right now the Bluejay spin out. So owning shares in Riverside, you get for every 5 shares in Riverside, you get 1 share of a Bluejay, and that spin out ex-dividend date is coming in the next couple of weeks. So it's happening right now. So it's optimal time to own Riverside. Getting free shares is an amazing gift. It doesn't happen a lot. And when Riverside has done in the past, the shares that we've dividended out have done very well. Capitan Silver, for example, we put out 4-to-1 ratio shares. Those shares have then tripled. Recently, they've doubled again. They've done very, very well. Seldom trading below the spin-out price, and you get those shares for free. So it's great to own. Get them and hold them. So right now with Riverside, doing that with Bluejay is great. Have a fabulous CEO, Jordy Mark. Super excited about it. Here in this office, we have a whole group of companies, and Riverside has been able to build high-quality companies. So that is top of mind. We have other things going, though, in Mexico and other places, too.
I do want to talk about Bluejay, and we're definitely going to get to it, timeline and everything towards the latter part of the conversation. Let's maybe take it chronologically. That maybe makes sense. But Cecilia, you've had some news coming out of Cecilia as well. In the meantime, what came out of there? Would you consider this a success, or would you have liked to see more grade or more width or less depth? Or what do you think about this?
So Cecilia is super good. So we've now completed our first phase of 2025 with working with Fortuna Mining. They funded another $750,000. We did the exploration work. We continued to program. We're doing great with them. Now we'll get to the decision of drilling. So you asked, would we prefer whatever? We always want discovery. We drilled 5 holes initially. Those hit mineralization, they hit widths, they hit enough that Fortuna then funded the next phase, which was the workup of additional targets and workup of those targets. So now we're in the point of having them reach a decision if they're going to go forward or no. If they don't go forward, we get the project back 100% with no lingering ownership by Fortuna. We're super excited. They move ahead as Riverside. If they, on the other hand, they decide, okay, we're drilling, then we have already permitted everything. We've got the drill permits. We're ready to go. The team's ready. We turnkey. Off we go with drilling the second phase of drilling at Cecilia with Fortuna Mining. So yes, the drill results were good enough to continue, and we're super excited about the potential for a large discovery for big scale. And it's nice working with Fortuna. They're looking for 2 to 3 million ounce big scale types of projects, looking for big discoveries. And so having them as a partner is wonderful. Big pocketbook, big ambitions, and working with us. It's great to work with a big partner like Fortuna Mining.
I want to get into some of the technical aspects of that news release and better understand where that's going, specifically because it's starting to get form. It's starting to lend itself better to conversation, if you will. But you talk about multiple feeder zones here. Where is that conclusion coming from? What's making you think that's the case?
From the drilling, from the structural mapping, and from the field work. You know, we have a camp on site. We have the team working there, and myself, I go out in the field every month or two and spend time out in the field. So what we see in the field, the feeder zones, is from the structural geology. There are two main zones. One going northwest, which we've called the San Jose because there's the village of San Jose, and one going northeast, which we call the Agua Prieta, which is going toward the town of Agua Prieta, which is at the border with into the United States. So it's a really good place at Douglas into Arizona. So these two structural zones, what we see at the feeder is high grades. So you see 10 grams, 8 grams, nice mineralization in those orientations, in the former workings. We've drilled shallow, now we drill deeper, and we hit those same structural trends. We use the software Leapfrog. That's very helpful to model in 3 dimensions all of our data. We've been able to fly the drone, get really good surface imagery, surface topography, put that into the Leapfrog model. So we have very good control about where the drill holes are, where the surface mapping is, and therefore project them down. That's how we can see that they're feeder zones. So as they go down, we can see, okay, we have multiple zones and multiple areas for further drilling. So we've drilled a few holes, 1 hole per target. That's a real sharpshooter. This is not at all a shotgun. 1 hole per target to hit. Do we hit the system? The answer is yes, we've hit a system. So now we'll drill another few holes into each of those targets. This way is a sharpshooter approach. Very few holes to hit, but we can therefore tell the science. So this is a technical approach to discovery.
Do you think these feeder zones are connected, though, John Mark, as opposed to being isolated structures?
I think they're individual separate structures that are coming. They're connected at depth to the same plumbing system. So they don't all be, it's not that all the veins go together into one massive vein at depth, but the veins are all coming off of, yes, similar magmatic source coming up, fluids going from a magma into the juicy zones, the water coming from meteoric water in the epithermal shallow system coming up and juicing the veins, juicing the alteration, and definitely having a lot of mineralization into those zones. So yeah, multiple different vein zones. Remember, we're talking about a property that's 80 square kilometers. So this is a big property. I mean, 80 square kilometers, 8 kilometers by 10 kilometers. So a big area. So it's not all going to be one vein at depth. We're drilling down multiple veins, multiple structures, which is good, and multiple different targets. We have the Cerro Magallanes, the Cerro Puma, and then we have other structural zones, the Mesa Ranch, and so multiple zones. So this is a district, kind of like Yanacocha, kind of like you see in these big district settings. That's what we're looking at. This is a district play. That's why for major companies like Fortuna or even bigger companies, the Cecilia project really can fit well.
When you say they converge, or well, the feeder zone, like the source of this all, the source of the plumbing of the system is one thing that's at depth. I'm starting to wonder how deep it is, of course. And you mentioned in that news release that the system seems to be tilted to the southeast. What's that telling you about how deep it might go and whether the boiling zone might be preserved here?
So the boiling zone, so we're seeing some of the zones of the boiling, we're actually drilling into them now. So we know it actually is preserved, and we can see it in the fluid inclusion. So we can see that we're actually getting to the boiling zones in some of our fluid inclusion work, and we're above it with the alteration. And then we can see that basically from 500 meters down to a kilometer depth is really a sweet zone. Now, remember, you've got topography of 700 meters just in this mountain. So you could actually go horizontally across into the middle of the mountain and hit the right type of the zone. So this isn't necessarily super deep. So from the side of the mountain, because you have 700 meters, even if you were going to a kilometer, you're only 300 meters deep on a decline. So remember, you're on this big mountain at Cerro Maguianas. So I think that's really interesting. We're in a nice hill there, Cerro Maguianas, and then looking at these feeder structures that would be for an underground target. The other targets at the Mesa Ranch are actually right at the surface. And the Myra vein system is right at the surface. So there are other veins that we can see that are actually coming up to the surface. So I definitely see between 300 meters to 500 meters is the alteration halo over the top. Then 500 to a kilometer would be the key zone of depth of the epithermal system, kind of classic epithermal depth. The mineralization we think is maybe 18 million years old, so it's pretty young. In other words, you're looking at the young part of an epithermal volcanic system, similar to what you find at the Oro Blanco and what you find as well at Oatman in Arizona, which were major gold producers. And we're right at the Arizona border. So this is the same geology that you see in Arizona. It's much younger than a lot of the other systems. Thus, we see we're in the upper part of the lithocap in the volcanic edifice because it hasn't been eroded down as deeply as it would be in older rocks if it was laramide at 40 or 80 million years old. As older systems, then you're eroded down into the intrusion. That's why we think depth it would go down into an intrusive source. We're not trying to test the intrusive source. We're trying to get the feeder zones over the top of the intrusive.
Thinking about the age of the system, I think there's a joke about my mother-in-law somewhere in there, but I'm not going to make that. Does what you're seeing here also correlate with what you've seen in the geophysics, or do you feel like you need some more data on the geophysics to know that it kind of works?
Geophysics helps us in two ways. One is the magnetics, helps us to see that we're seeing a magnetic center. But none of the rocks are very magnetic, not the intrusions and definitely not the host rocks. So we really found that didn't do too much for us. The IP, on the other hand, tells about sulfur and sulfide. Again, it's a low sulfur system, so we don't see that. So what we're really finding working for us is the alteration. Doing a lot of work with SWIR, looking at different alteration contexts, and the geological structures are allowing us to get ready to drill. So I think the next phase is drilling, not geophysics. We simply see that, okay, with this, we can drill at these targets. We have enough structural data. We've done enough work. We think we know where the feeder structures are. It's better to drill than spend the money doing geophysics. With the drill holes, we'll know, we'll have a really good sense of what's going next. So I'm super excited for the drill program that we'd like to do. We're not announcing it yet. It hasn't been funded by Fortuna. If Fortuna doesn't fund it, then we would be able to go forward ourselves or with a partner. We have $4 million cash in the bank right now, no debt, no warrants. Haven't really done a financing since pre-COVID. So this would be a key asset for Riverside after the spin out to move ahead if we got it back. We'd be really excited by the ability to work with this project. Cecilia is one of the assets in Riverside.
Hold that thought for a second, John Mark, because I do have a question about that. We'll get to it here in a second. But I also see, or I wanted to talk about I see that you mentioned Yanacocha and Mercedes here. Why? I mean, how does the system compare to Yanacocha and Mercedes, again, structurally or geochemically?
I think three ways. First off is size. We're seeing multiple centers. Secondly, geochemically, seeing that we're in rhyolite domes, seeing we're in felsic epithermal systems, similar type environment. And the third is structures. In both districts, the structural control of those domes, the domes and then structures coming off of the domes is similar to what we see at Cecilia and what you definitely find in the geology at Mercedes, which is just nearby, close to where we are at the project there at Cecilia. So that's great. Also, you see the structural control at Las Chispas that's recently bought by Core Mining for over $1.5 billion. I mean, these are bought systems that are just to the south. It's what was Santa Elena and mining there. And so the system with First Majestic. So there's a lot of these districts. And so I think that they definitely have that type of signature at Cecilia. And Yanacocha similarly, multiple dome centers, structural control, gold mineralization. That's what we're seeing at Cecilia.
Yanacocha, isn't how big is that again? I think it's what, 50 million ounces?
It's a giant system, and it's got, yes, and it's got 4 or 5 different centered zones around it. And that's what's interesting, because that's what we're finding. We have multiple centers at Cecilia. We have Cerro Magallanes, we have Cerro Puma, we have Cerro Magallancito, we have 3 different domal centers. So it's a cluster, a dome cluster. And when you're in those dome clusters with structures going through it, that's what's really exciting for potential for finding large district scale deposits and systems. And so that's what I think we could potentially have at Cecilia. So that's why I really like the project a lot. Yes.
What about the age of the rocks? Is this the right setting in terms of age relative to those two deposits that we mentioned?
It is interesting, when you look at, I mean, Yanacocha's in South America, is in Peru, and so it's not in the same thing, but it's a similar age, which is pretty amazing. It's a similar age. And when you look at these, they're very young systems. And yes, these young systems at the 18 million year old kind of is a very interesting time when there's a lot of felsic magmatism, and that felsic magmatism gave rise to a lot of good gold mineralization. And so it's a very important and interesting Miocene age event. And it's great. I love doing these calls with you because I never get to do so much geology as I do with you. And so it's a lot of fun, and it's a treat, because as a CEO, I usually don't dive into the technicalness that I love to do. So it's great. I mean, I got my PhD and I did work at Harvard. I did a lot of technical work in my past, but usually most of the discussions I keep a lot simpler, but I love to dive in as deep as anyone wishes to go into the technicalness of the fluids, the fluid chemistry, and the geology. It's a lot of fun.
It's well, it is interesting. It's a lot of fun when it works. It could be the opposite when it doesn't. What I think is that it's really important. It's important to understand these things, especially when you're talking about early stage exploration, and specifically when you're targeting something that big. That's why I asked you how big it is, because I'm also wondering to properly figure out a system like this, and the orientation, geometry, and everything else. How much more drilling will you have to do? And I understand it's a bit of an arm waving response if you were to give me one, and it's forward looking and all that, but how much drilling would it take for you to get to a size that big?
So I think you're actually going steps. And so the first thing is we drilled 5 holes, built upon the previous 3 holes, built upon the prior 23 holes, built upon the prior 7 holes. So it's been going on, the project. I went out to this project in 1987. I was a translator in 1987 as a young geological student. And so these projects go a long time. So right now, with these structures, 3 or 4 holes per structure help us with what's called a 3-point problem: surface and at depth. So if we can get a few intercepts into that through those, that will help us about the plane. Do we see this plane? So 3 or 4 holes into these different planes of structures. Do we see their continuity around the system? So we're really looking for structure, not necessarily for overall creating a big deposit. Then you drill, infill drill, to begin to infer a resource. And then after you begin to infer a resource, then you drill more to get it to be indicated and eventually proven. So you're exactly right. It takes steps. But initially, in 3 or 4 holes, you can begin to tell things. That's what we did with Capitan. We drilled 5 holes, and we said, with those 5 holes, I could see, okay, this is going to be good. This is going to has a potential to be 1,000,000 ounces. And we were able to make Capitan mining. And it now has over 1,000,000 ounces of gold. And it now has over 500,000 ounces gold equivalent in silver. And it's going. And so you can see with a few holes. So for us, in each of the targets, 3 or 4 holes into 4 different targets would be 12 or 16 holes. And with those holes, we begin to sense, are we into something that has the potential? That's the beautiful thing about early discovery. Early discovery is not trying to prove it up, but simply identifying and showing that it has scale. And we're looking for scale. Things that are big, things that the majors want to be involved in. That's why partners like BHP, Tech Resources, all these different groups, Cliffs, Kinross, Antofagasta, have all partnered with us in the past. And it's been great to work with BHP and these other companies, because we look for big scale projects and try to de-risk them to, is it actually going to be something really large? And that's where, so it's not that dilutive initially. And then you're right, as you go forward, it becomes much more dilutive. That's why we then put them into their special companies, as we did with Capitan, as we're doing with Bluejay. We see that it can be big. Now it can move ahead as that company, and it really can grow with the required exploration that needs to be done. For example, at Cecilia.
How much has Fortuna spent on this now, and how close are they to earning that 51%?
They've spent roughly about 1.3 million, and they have to go all the way up to over 5.5 million. So they're a third of the way there, which is great. So we're in a good position here to be moving, and we're looking forward. The next program might be another $800,000. So at the end of the year, they might be at around 2.1 million, maybe US dollars spent on the project, possibly would be a general frame. So they'd be then getting to be 40% of the way through it, and we will have tested at that point multiple of these different targets. And so we have a good line of sight, because by the time we get to that point, then we could be able to fund our own part, because we'd see that it has that potential proven up. That's the point of having sufficient spending at the projects, that then we could decide if we want to participate or if we just want to stay back and get a free ride for the royalty.
And I understand you're not committing to it yet. You don't have a drill plan yet or anything like that. But what is it looking like? I mean, in terms of maybe what's your fingertip feeling about this? Is it looking like Fortuna wants to move forward?
It's a good project. We're going great, and I've planned to be back down in Mexico in about 3 or 4 weeks. So so it's good. So planning to be down there, and we're doing it. We had meetings at the conferences, and things are going well. So I'm not at all concerned.
What exactly then would you consider success at the end of potentially, again, this forward looking? So if you do go into that phase 2 drilling, what is success going to be like? What would you want to see?
We definitely need to start seeing grade. We hit size and we hit alteration, but now we need to start seeing grades. So grades of mineralization in the drill holes. Now, historically, some of the workings we've shown, and in the recent work we've been doing, has really good grade of 6 and 8 and 10 grams of gold. We found some more nice grade like that. So if we can find some good grade in the next round of drilling, we're off to the races. If we don't find grade in the next round of drilling, it's difficult to see for Fortuna to continue for a third round of drilling. If you've had the first one was to show that we have a system and a size and we passed. Yes, we do. Now, okay, now we're going to test those systems, those parts of the system with this program. So now we want to find grade. If we find grade, then the next size is to then continue to go, okay, how big is it now that we found grade? But we definitely see that we have a system, and so we passed that. So now we want to find grade is the next step in the drilling, in the life of the project.
What is grade in your case? Like, what would you
So you
consider?
need gold or gold equivalent. It's generally a gold system that we're looking at. 1 and 2 grams of gold is very nice and good mineralization to have. If you have up to 5 grams, and that would be amazing and really, really good. But even at a gram level would be good. At half a gram, it's just an anomaly, but it's not really going to be something that's going to really drive forward. If you look at Fortuna Mining as a company, for example, they have 5 operations. They're operating in Africa and South America. So for them to be able to bring another project forward, they need to have a 1 gram or 2 gram type of grade generally to be able to make it look interesting and exciting to them. And if it's less than a gram, then it's something that becomes something for a bigger picture, bigger play or something. But for them, I think that really needs to be in that type of assay level would be a good place to be.
If you were to drill, or if this was to go through, when do you think that would be happening?
I think definitely this calendar year, the holes are permitted, the site's permitted. And so I think we definitely would have drilling and probably have drill results before the end of the year.
That would have been my next question here. Permitting, then locals, would everybody be happy with you drilling there?
We've got that all done.
Okay, good. How was accessibility this year? Drilling, just the logistics. Did everything go fine? How do you expect that to go next time?
Yeah, no, we have a really good team. You know, the team's been working together for 18 years. We've worked in Mexico before that for a decade or two. So lots of time and operate out of the state capital, Hermosillo. So, you know, we work on all the time. Today's Cinco de Mayo. It's great. You know, I have a special shirt for Mexico. But it's funny because that's the day of Puebla. It's not actually the Mexican Independence Day, but we in the Western world think it's like this great significant day, which is fun. In Mexico, it's not, so it's kind of funny, but. So it's a bit of a bit of a laugh, and it's interesting because for us Mother's Day is coming up, and Mother's Day will be on a Sunday, the second Sunday. But for Mexico, it's the 10th of May. It doesn't matter what day of the week, but it's on that day. Again, even Mother's Day is could be a different day. So it turns out that it's next Saturday, the 10th of May, is Saturday. So that's the 10th of May. So it's fun, different cultures. So for us, I think it'll go well. We really understand the Mexico culture. We have Mexico team and we're local. And so whether it's talking about holidays or whatever, it's with our local team. And so I think it'll go well. We really count on those people, and the guys are great to work with. And myself, I'm glad to work down with them quite a bit.
With everything that you've got going on with Bluejay and Mexico and everything else, really, that when we'll touch upon some of these stuff later on as well. But does that, and you going down to Mexico, does that slow you down from marketing and potential shareholder engagement, telling the story?
Well, we have a really good investor relations team, and we're doing a lot of work. And we have Eric Negriff running the investor relations part of it, and I think that's good. We have a budget. We budget about 1/7 of our annual budget to marketing, and you could spend a lot of money on marketing, but generally we're a small company, and so we do marketing every morning. I get up. We have 40% European shareholder base. I'm communicating with them. We do a lot of work with them. We'll be in conferences as well. But yeah, you could be at conferences all year long. And I don't know if that creates value. I think what creates value is deals, assets, and results.
Mm.
And if you communicate those, and so I think we do have a sufficient communication and sufficient spending to do that. And we're not trying to overhype anything. I think if people follow, but we love working with you. Your reach is great, Antonio. Many people come and say they've seen the videos, and that's why, we've signed up with you and continued. Really, as I've told you and your wife, you guys have really done a good job of creating a product that people like to see, and your long format. I didn't believe it would work, but I'm glad to change. It's like, it's all right. If it works, I try to figure out what works. And so we do conferences and do a lot of things, but these videos work really well.
Thank you. I appreciate you saying that, and I like to believe that this is going to be the future of doing interviews. A kind of unprepared, long format, going into the technical stuff and so on and so forth. So I'm glad that you're appreciating that. Um, how much money do you have left right now? I think you had, what did you have at the beginning of? Yeah.
Yeah, we have about $4 million in the bank, which is
Okay.
great, and that's good. That's Canadian, and that's good. And we have no warrants or anything like that. We do have potential payments of partners and option payments, as well as potentially a payment from Fresnillo around our royalties. So we'll see what happens. But we're in a good position right now, and we're glad to move it ahead. But as we drive things ahead, we're very careful about the capital and are spending the partners' money. We have the news release coming out about the Union project. Union in Mexico is a good project. Again, we're getting paid in shares, not cash, so that's okay. But we're also getting a bit of cash. But we're operating. So as we operate these projects, so we operate for Fortuna, we operate for Quest Corp, the partner on Union, we operate for different partners. They help to really lower our burn rate down a lot, and we work on those projects. So that's good.
Well, last time you and I spoke, you told me that you expect about $500,000 in payments from partners in 2025. Has any of that already hit the books? Is your expectation still the same, or how
Some of
much? Yeah.
that's, yeah, this union project is coming in, and I think we're actually, if we did that in Canadian dollars, we'll be ahead of that at the end. Yeah, so we'll be more, and so yeah, we've already been getting some. That's how we've been able to keep the $4 million in the bank, because we've been since we saw you in November, we've been about the same cash level, so we've been having cash come in. So yeah, the cash is coming in on different payments and different work programs, and so yeah, so that's been on track. And so we're a third of the way through, and I'd say we've already gotten in incomes of 300,000 Canadian dollars easily into Riverside coming in.
So no need to think about raising capital this year then.
Correct.
Okay. Will you be, that's something I thought about yourself in your business model. Like if you pull this off properly, essentially you're never going to have to raise capital again. But are you going to be opportunistic about it? Like if there's some sort of a market and your price goes from, was it 18 and a half today to whatever it might be higher, are you going to be opportunistic in trying to raise capital off that?
Yeah, I think it's okay to have to raise capital. If you have good use of capital and places to put it, it's okay. And we've raised capital, and we raised capital and we did it. We did the drilling. We've created Bluejay. We've had over $8 million total spend overall in all the work that's happened at Bluejay. And so from that, that's great. From life of the project. So on the other hand, now if we dividend that to shareholders, it's a bit of a cash dividend. If you give the shares over to the shareholders for that value, then that's pretty cool. So that's a good step. So yeah, so I definitely see that we can make good progress that way.
Hmm. What's going on with the royalty portfolio? Last time we touched upon it a little bit, but how's that going now?
So it's exciting with Bluejay adding royalties there. Secondly, excited to see the progress. I did a site visit down in Mexico at Tajitos. It was great to get out on site to do our annual review. Wonderful to see what's happening there with Fresnillo, the world's largest silver company, largest silver producer, and them as our partner on that. Was wonderful to go and look at the scale of the Tajitos project to see how advanced, be in the camp and see what they're doing. So we're super excited by that potential for that royalty, as well as the work that's happening in Arizona at Sugarloaf Peak. That project also having good potential. So yeah, we definitely are keen on that, and we're keen on adding more royalties. And we've been able to add the royalties here with Bluejay, which is good. I'm super excited by what's happening with Pichette and the work that maybe I'll get Jordy Mark when we want to here. I can bring him over. He's here in the office, and he's the CEO of Bluejay, in fact, and he could update you on that if you wanted. But it's really great, and we have a royalty of there on that.
Yeah, definitely want to hear from Jordy. Sugarloaf is always an interesting thing. I think you and I have talked about this before. Has your opinion or strategy or approach to it changed over time? I think it's what is it, a 2% NSR? So it's not, I mean, it's a large royalty. What do you think about that?
So yeah, I think so no, our strategy is just sitting tight right now on it. We like it. We definitely would, if we were there, we'd be drilling and pushing ahead quickly because we think it has such nice potential. Also, it has big copper potential underneath, and the royalty is open for 2% on all elements, not specifically gold or specifically any element. So that's great. And so I think that's really good. And I think that's generally like all of our royalties. They're just general 2 or 2.5% royalty, not specifying around what. So as they move ahead and through the life, the gold or other elements is really good. So I think that's excellent. And I think at Sugarloaf, it has very shallow mineralization, which is easy to see as an open pit to move ahead. And with high gold price, definitely see that project has good value.
Do you think you might eventually, or like what has to happen at Sugarloaf for you to rethink that role or renegotiate that royalty or do something else with it?
So I don't think we're in a spot to renegotiate it. People have come and asked to buy it, and we're glad to own it. And if the price was right for what we're doing, then we could do some type of transaction. But for us, having this bundled up portfolio of royalties is a great asset for Riverside shareholders. So right now, buying Riverside, you get all these royalties really priced for almost free. You get the shares as well for the spin out of what's happening with Bluejay, and that's as well. And then as we're talking about these specific assets, you get the upside from discovery for the different projects. So I think those are good. So as we go forward with the royalties just get more and more valuable. And yeah, so I think people will begin to see, and there's been some interest in what we have, and we're glad to see that as a potential revaluation of where Riverside is, and we are a public company. So owning shares in Riverside sets one up well for participating in the upside of what could happen for the royalties, definitely.
Right. What else then? Just before we get into, I do want to go into, as I said, to Bluejay, but what else happens this year outside of everything we've talked about so far?
British Columbia. And in British Columbia, rare earth elements and gold. And I think we've been adding more projects recently on the gold side. And the rare earth elements are just getting better and better with what's happening with Trump, with tariffs, and what's happening with China and the fighting and kind of complexity around that. So having good rare earth element projects. So for Riverside to own rare earth element projects in British Columbia, where you can drive to them, where you can get to them, where you can work, is great. And that's been something we've focused on over the last 2 years. years, and this year we'll definitely see more work. Here I am in British Columbia today. It's beginning to get warm. The snow is melting, and so it's a good time to get into the field. And so we'll definitely see that during this summertime, progress for Riverside in British Columbia will be good. The government is fairly supportive. There is a certain structure of financing here that people allows partners or ourselves to participate. So we really like the potential. So I think for us, British Columbia will be a good place for us to have news flow in the rest of this year as well.
Well, it's not raining today in Vancouver?
Exactly. So it's not raining today, and it's
Not
good,
yet.
but we're definitely ready for that, and have four-wheel drive trucks ready for whatever conditions it takes.
I often hear Vancouverites complaining about how much it rains in Vancouver, but I looked it up, and on average, we get like 30 more rainy days per year than you guys get. So I should be the one complaining.
I
Uh,
totally agree with you. Yeah, people, if you look at the facts, it's not that bad.
it's really not as bad as we have it here, I suppose, in terms of rain, but there's other positives. Let's get Jordy. Let's talk
Okay, let me
about
go get him. I'll be right
Bluejay and
back.
what's going on there.
We got Jordy here with us, so that's great. So Jordy's the CEO of Bluejay, and thank you for the time. This is a great opportunity.
Yeah, of
Yeah,
course.
great to chat with
And
you, Tom.
Jordan, you and I are going to do a deep dive on Bluejay once it's listed. How's that going? What's the timeline for getting it listed?
Yeah, listing, certainly the spin out. We're looking for the spin out pretty soon, I'd say in May. And keep moving on there for listing thereafter. So
Hmm. How long could that take spin out to listing?
spin out to listing, you could take 2+ months depending on how the TSX goes ultimately.
Hmm. Because I'm just wondering what's the record date, kind of like, well, when do I have to own Riverside shares by if I also want a Bluejay?
Absolutely. Well, you could think we haven't set a specific date as yet, but I mean, safe to say probably sometime in May, I would say.
Hmm.
Mid-May.
Okay. Is it going as quickly as you expect? This going slower? What do you think?
It's probably around about on pace relative to expectations, certainly in terms of vote. The vote was on track, et cetera, seed, So it's going, I think, a usual sort of standard modus operandi for listings.
Hmm.
Probably more streamlined because we've got a great back office here. They've done it before at Capitan. So particularly when nuances come up, they know the people in regulatory authorities to talk to, etc., TSX, to just get through the process as quickly as possible.
Is it all paperwork right now? Like, has any work been done on Duke and Bichette in the meantime?
So we're trying to hold off on Pichette at the moment, simply because we have a qualifying report for Pichette. So if we do work on there, it can't be work that would be deemed to be material in nature and potentially change the qualifying description of the asset as defined by the accepted TSX 43101 report. So we're in kind of the sort of an interesting landscape at the moment in terms of the degree of work that we can do before actually listing.
Hmm.
So, for instance, it's really difficult to do drilling, particularly if you see visible gold or if you see things that could be deemed to be material, good or bad. You can't necessarily skew it one direction
Hmm.
around the project. So to take that potential risk out of the play, I see it as risk out of the play in terms of having a third party review your timeline.
Hmm.
We might not deem it as being material, but some other third party like a TSX may. So let's take that out of the timeline and move forward.
Right. But you do want to do some work on it once it's listed. So this year, essentially, you're still going to
Oh,
do some work. Yeah.
absolutely. Absolutely. So in terms of critical to the philosophy of grassroots exploration in brownfields area is to be able to execute more cheaply than you would elsewhere, but also be able to develop a hierarchical targeting strategy within the portfolio that you have.
Hmm.
And that is best achieved by looking at and developing multiple layers of data that you use to be able to hone down the drilling dollars that you can put into the ground.
Mm-hmm.
And so that's by integrating your data sets on geophysics, chemistry, and surface geology and structure. Then to be able to hierarchical develop targeting strategies to test more than one target at once. Yeah. And that's seemed to be a really good modus operandi in terms of exploration drilling strategy to test multiple things, ultimately to give you sort of an idea of what's happening in different parts of your portfolio. You know, because sometimes different results from different areas will give you insights into things that you haven't seen elsewhere. So it's important to be able to generate the good data. We've got great drilling from the discovery in 1952 that was never followed up on. It would be very easy to go, yep, let's drill under that and go laterally. We can do that. But we have seen surface mineralization across several kilometers of the ground, all correlating with banded iron formations and the associated shears over 12 kilometers of ground. So why don't we try and holistically look at those systems together to develop a better strategy to look and employ the most expensive component of your program, which is drilling. So we could start coming out of the gate looking at surface geochemistry and soils, further surface work in terms of channel sampling along banded iron formations, some selected geophysics to generate high detailed sort of projections to what's at depth, so IP or resistivity, for instance, and integrating that with the high definition magnetics data and LiDAR data that we've gotten. Freeman, the VP of Exploration, is doing some fantastic work in interpreting how the geophysics could meld with structure from the LiDAR data that we got earlier this year. So it looks through the vegetation, it sees things you just can't see from aerial photography, gives you a sense of what the prevailing structural controls are or could be, and how they relate to potentially localizing mineralization. So if we can combine that with that, chemistry, geology, we start to basically lower the footprint that you look to put your drills on. And that's part of the game. If you're large area, and we do, it's over 80 square kilometers in the three packages. Your idea is ultimately to lower the window of opportunity where you want to drill, and that just saves you dollars and puts the focus in on the drilling programs. The other component is the philosophy of being in a brownfields areas. We've got latent capacity. We don't need people to be in camps. No camps are required. Drilling is cheaper. We're looking at around about $300 a meter, all in geologist, chemistry, mobilization, etc. So we can execute well. It's along the existing highway, 25 minutes drive away from an existing producing mine at Greenstone, Canada's 4th largest mine, within Canada's 2nd largest gold producing company, Equinox Gold. So we're in the right area. We can do it for less. We're undertaking exploration approaches, which also able to window down in terms of discovery. So this year, we're looking to integrate data, develop new data on the surface, generate drilling targets, and be drilling later in the year.
So still committing to actually going out there and drilling 2025.
Yep.
Okay. What are you listing at? Do you know any of the listing details in terms of share price?
We don't know that. That's certainly market dependent, to be perfectly honest. We've got a projected price at 50 cents, I think, that we put out there in the market in terms of, I think, part of our voting process. Market always determines what that's going to be, and when you go to that raise, that will be that consideration there. But certainly, we did the seed, which is closed. We did that at 40 cents. We did the founders round at 20 cents. So we've been sort of moving up, having a lot of success in terms of a lot of interest in a new grassroots explorer in safe jurisdictions looking for high-grade gold. So very phenomenal sort of support, but also obviously with the backdrop of where gold is, how Canadian producers are performing, and the acquisition space behind that. We're very excited to be out there investigating new opportunities for discovery and growth.
There's loads that I'm not asking you that I could and that I will once we do a Bluejay deep dive itself. What I'm really thinking here, Jordy, is what how do you make sure that a spin out would oftentimes you would list it and then the share price would trickle down because people get free shares. They just want to own the main company and then they would sell off the other shares because they don't necessarily care. And I've seen that happen multiple times. How do you prevent that from happening? How do you make sure that when you list, it doesn't go straight down?
Yeah, that's a great question. I really like that question. And that's something certainly from 18 years in the capital markets industry, looking at natural resources on, both from the hedge side perspective, but also from the brokerage side, is pragmatic capital markets management. And we're actively looking into a whole range of components there. And that's market awareness through distribution of news and the standard typical news of, we'll have a range of catalysts coming out the gate to be able to keep eyes on the story and bring new eyes onto the story as we go forward. But also, we have to get out there through other forms of media to be able to promote something new. And that is one of the many facets. What I like around Bluejay and what John Marker created through Riverside was ultimately pick up good projects, safe jurisdictions, gold, brownfields exploration, be where the gold is. It's actually an equity story that plays into every region of the world as investors. And as an investor, you don't have to argue about the value of gold versus other commodities. So you open far many doors. And for us, and the backdrop, having Rick Rule come into the placement, around 10% in the seed, even more in the actually more in the seed, 10% in the founders round. For me, getting into the largest economy in the world, the US, retail investor, family offices is a very important aspect of what we're going to be doing. So getting down and having Rick's support, being involved there, getting out there and telling the story in the US market is very important for us. Plus having a live sort of marketing approach as well across multiple platforms and different groups to be able to communicate a message of a new high-grade story. And that's where we differentiate from the 2,000 other venture companies is, these are new assets born out into a safe jurisdiction in a timely area where Canada is really the powerhouse in recent new gold production and acquisition and consolidation. So you have had the 3 mines from Newmont shed out to new companies like Discovery Silver. You've had ultimately 4 new producing centers coming on stream in about 12 months. You've had Greenstone itself, you've got Artemis, you'll have Valentine as well as Back River. That's 1.2+ million ounces of new gold production in Canada. Canada generally, when you look at the large-scale intermediate gold producers, their operations are Canadian operations are typically on the lower cost curve. That's why we're starting to see existing, consolidation of assets in Canada for long-term exploitation of the value of existing capital around existing producing centers. So very exciting time to be out in gold, very exciting time for gold in Canada and investors to invest in safe jurisdictions with and around mining operations that have high margins. So that's where we see it's kind of an exciting time.
It seems like both of you are bullish and Bluejay, and I'd be concerned if you weren't. I mean, that's kind of your job here. But nothing's ever perfect, right? What isn't here? Like what is something that keeps you up at night? What's something that if you had a magic stick, you could wave it at something and you would change? What would that thing be?
Well, that's another good question. What would it be? Ultimately, it'd be great to have what keeps me up at night. Awareness of what the future gold price is going to be, and that's the underlying component there is, ultimately, you think around the volatility of gold price around what's happening, in the border south of us. what happens there. And what actually puts me back to more comfort when I think about that is that ultimately the underlying value for gold is, you could say time immemorial for humanity, is most gold's always been produced, is still on surface today. So the value of gold is there. The value of gold for Canadian producers, given the exchange rate, is very, very high. And we've only just seen, the start, I think, of the downward rotation from investors coming into producers, then coming and looking for discovery and growth plays. So the opportunity is there. So the greatest concern there is looking at gold price, but I'm very confident in where it's actually sitting. The technicals in terms of where it's sitting at, what's north of 3,300 today. Fantastic operating margins. And just to echo that, when I look at, say, as a former mining analyst from the past, people look at what projects are making money today. And I just look at Evolution's Cal expansion, 450 million capital to go into that with a spot price. You're looking at a 71% invest IRR. Those kind of returns are phenomenal. So for me, this is the reason why people and companies will look to expand in existing operations, because they can pay back their existing production and pay back their capital very quickly in a commodity price environment that we have there. And this is why being in a brownfields area, being around an existing producer who, for us, will look to augment their capacity, will look to other projects outside their existing operations, we're in a very good position to be able to capitalize on that.
It'll be interesting to see how you get it over the line and list it and everything else. And again, we'll be back to this to do kind of a proper CEO barbecue, if you will. I think I'm through with these questions. John Mark, what about yourself? What keeps you up at night with everything that you've got going on?
Yeah, I think the capital markets. Hopefully, the gold price has gone up, and hopefully the share prices haven't moved. And it's like, wow, they're not moving up, but the value is there, and the assets and the royalties. So what keeps up is that the people that do participate really can make good money, and it's a great time. And I think it's just this huge band of anticipated uplift that can happen. And so what keeps me up at night is just hopefully, with this high metal price, that people will start to buy the shares and own the shares and see that they actually have really good upside and they have really good ownership in these royalties that we have and other aspects to the whole portfolio. And it's great to work with Bluejay. I mean, it's a good gold market, and we have been able to finance, been oversubscribed each of the financings, been able to do it quite well. So the capital is there. It's simply, do they buy stock in the market? Everyone wants to buy in private placements. And so I think, do you own good quality companies that don't have to keep going back to the market and finance? Is a really interesting dilemma.
It is. That's the thing that initially introduced us to each other and got us talking in the first place and all that. So it's good. It's been good. It's been a good overview. What am I forgetting to ask you here? What did you both come here hoping to talk about that I failed to bring up?
Well, for me, I just want to make sure that everyone knows, Jordy's here. We're on board. We said, like you said, we had our interview before. We said what we were going to do. And what Jordy has said is I'm really pretty committed to following through with the program and being what we say. And right now we're saying the spin out's happening. So picking up the shares right now to get participation. And you brought up the question about what happens afterward. After we did that with Capitan, the share price went up. It tripled, and we had the results. And I'm really excited about now with what we have for Bluejat, the high quality work, the work we can do. We just can't do work until we're actually get past these different steps here, because we filed the 43-101. So I think, hey, it's really good. There's nothing wrong with it. It's great, and it's a really good fit. So I'm super excited. I've participated in the financings, owning more Riverside myself.
Good. Jordy, what about yourself? Anything that I'm forgetting
to
ask
me,
you?
just a reminder, we're a new story, new kid on the block, new interesting, exciting, following up on exciting exploration discoveries, historically never been followed up before. The right area, the right time, great at surface and size. So you can't really want much more than that in a new grassroots discovery growth venture.
Well, I guess, Jordy, you and I are going to pick it up sometime this summer, I'm assuming, when you have an exploration program planned. And then, John Mark, you and I, when's the next time you and I are going to be speaking?
Well, we'll have news coming out about the Union Project. We'll have news about Cecilia coming. And so with those two newses, I think that'll be really good to then catch up again. I know you're going to be traveling and some of the places you're going sound really exciting. So after that, we'll have a catch up, but we're really excited about this step. And then over the next 3 months, we'll have lots of good news flow coming from Riverside.
Awesome. Well, thank you, gentlemen, so much for your time today.
Thank you.
Great.
Really
Thanks
good
a lot.
doing the call.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release resource talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."